Good day, traders. Stacey Burke from Stacey Burke Trading. Thursday, May 28th. Daily currency levels for the British pound crosses. No major news on the event on the events calendar until tomorrow morning at 8:30 New York Eastern Standard Time. As we head into our end of our Asian session, we're looking at the pound Aussie. Some big moves yesterday. We are still technically in a downward move. We talked about the possibility of this pair having a measured move from that upper rectangle box. We did one full expansion of that move down. The market has consolidated right around that level currently. We had another measured move take place from the lower high to the swing low. That market has since fulfilled that as well. And now we have another measured move in progress, possibly from the 1, 2, 3 at the beginning of the month. We've almost done a second full expansion of that range. The market is currently trading at 85.60. A second full expansion would take out yesterday's stops, taking us down to around the 83.75 area, which is approximately 90 pips from where we're at now. Our 4-hour chart, again, a pullback in the last 4 hours. We have stops below those lows at 8,500 and as well as above the highs of yesterday at 86.27. Possibly if the market was to move higher, maybe a sloping double bottom and possibly ascending rectangle. If this market takes out the lows at 8,500, as we talked about, that measured move could still continue. We do have stops underneath of that range. The market is in an extended downward movement, so today's session could be interesting. When we look at our 15-minute chart, we can see that the market traded down yesterday and then moved up aggressively, clearing out all the stops from Asia and London, and then a creeping trend down, 1 push, 2 push, 3 pushes, and a 1, 2, 3 this morning in Asia before moving up and hitting stops from yesterday's shorts in the U.S. session. We have an anchor point low at 8,500 where Asia traded into today, and we have an anchor point high, the high of those, the stops sitting above the 86.25 area. They've already been up once. We could see a second push to the high and then a move back down to the Asian session. Breakout traders, and again, we'll just mark that off. The market's already extended the range, so we'll either be working the high for possibly a breakout and continuation, or they'll come up one more time, hit the stops, come back down to hunt the Asian longs, or as we're seeing now, we could see this market come back inside of the box, hit the stops, and retest the highs for a move back up towards the high. Currently, it's a 1, 2, 3 down. Again, it depends which way they head. If they move up and push, push, push without taking out the high of the U.S. session, we could see a move back down to retest the lows and continue that move and also test yesterday's lows. Currently, they've already got break-even traders up top, and now Asian longs and putting a high of the day in place with the engulfment pattern. Traders are short. Obviously, we have stops above the highs, and as we talk about bringing it back into consolidation, one of these areas is going to get hit first when they hit the stops. If they work it low for the move back up, or they'll come back up top for the move back down. Next up is our pound Canadian. And again, this pair had a big day down yesterday. We had the pin hammer on Tuesday. Breakout traders were taken in at 69.75, so there'll be stops sitting up at that area. Break-even traders, we did a full second expansion of that rectangle. If we were to continue to fall, we could move fairly quickly downwards, as there wouldn't be a lot to stop this market. There are some levels underneath the pins, but this market potentially could do a second full expansion, or at least to the 67.50 area to see if there's any support. The 4-hour, you can see that was quite a strong move and then went sideways into consolidation. It is possible we could see a measured move. Again, the next 4 hours in the London session will give us a bit more insight. We came and worked into the low anchor point without taking out the low, came back up, took out the highs of the day, and have pinned up towards the anchor point high from the swing into the close. Again, this market could push a little higher and keep trending and making new highs and break through, pull back, and continue to yesterday's U.S. session longs. Or this market could drop down, retest the high, and fall and test yesterday and today's lows of the day for a continuation of that downward creeping trend. So we've had a downward move, consolidation. If the market either breaks higher, pulls back and continues, or will work the high for a retest of the lows and a continuation of that move down. Next up is our pound Swiss. And again, on our daily chart, we pulled back into last month's low, breaking the trend line or having a trend line break, but pinned the highs yesterday and then came back, and we're currently trading right at the same level as the lows of last month. This market, if it was to fall, could retest these lows and continue that move down, trend line break and retest. Currently, we're right into that level where this market could go either way. When we look at our 4-hour, again, you can see it's consolidated along the low of last month. We have a bit of a reversal double top with pins above us. If this market goes sideways and retests that low, again, we could get a stop hunt on break-even traders who have shorted this market just above around the 1890, 1900 level. And if the market again falls and comes through the lows of the day, we could continue our move back to the lows of last week. There are higher level stops all the way up. If it fails, we could see a fast move right through down to the lows. Again, when we look at our 15-minute chart, we can see there's an anchor point high from yesterday on that reversal trade. Stops up top, stops in the U.S. above the U.S. session swing highs, and an anchor point low from yesterday's low. We have lots of stops underneath from the anchor point lows. The market made a creeping trend up, engulfed, and has retested that and gone sideways, and currently trading underneath. So we've got a bit of a micro double top. We could see a stop hunt back up one more time for a measured move down through, if this market does go up, through the new low that they just put in the extra session of Asia. Lots of room on both sides for this market to move today. Our pound yen, again, our daily chart pushed a bit higher on Wednesday, consolidated an inside bar yesterday. A very tight range just underneath of the 3250 area. A break higher would see us possibly retest that upper 250 pip box. If this market works underneath 3250, we could see a retest of the lows a few days ago and the lows of last week underneath of 29.28 if it was to break the double zeros. On our 15-minute chart, we can see an anchor point high, anchor point low. We're in the middle. They've retested that 50% level, and that is the low before the peak formation high that they retested yesterday. So we had this level just above the 3275 area where there's obviously selling. The market put in a third peak yesterday, possibly a peak formation. We've got a bit of a micro double top formation that's happened in Asia before they dropped it down, and we've consolidated underneath of that level. A bit of a squeeze happening. This is the rising trend line from earlier in the week on Friday, Monday. So we can see this market is getting to a point where we'll squeeze any further. We could see it peter out and roll over or break to one side and possibly continue that move, hitting stops up top or down through the low of the day. Just mark this off again. So there are stops below 3,200 and above the high of the day. And if this market comes through, there is obviously some gaps and some space on both sides for this market to move as well. Next up is our pound New Zealand. And again, this market on the daily did a second full expansion of the upper rectangle that it broke out of. Then market has consolidated underneath currently. If we just put the measured move on from the rectangle at the beginning of the month, the breakout pullback, we see we've also done a second full expansion there. I'll just take this over. If it was to break, we have a possible third expansion down towards that 93.50 level, and there is room for this market to continue that move, hitting stops. There's some gaps through here, And if this market does continue to show weakness, we could see this moving down as low as 93.50 again. Currently not really demonstrating any form of reversal, but again, we have possibly a 1, 2, 3, depending on how it handles the 97.50 area. The next few hours will tell. So again, our 4 hour, we worked our way down, had a 1 bar pullback before dropping again and consolidating, rolling off of the numbers, a second full expansion. The market is continuing and just auctioning on that third full expansion. Again, there are stops below at 97.50. This market has had a fairly good run, and it's possible it could still continue to move and do another expansion of this range, taking us down to the 96.50 area. Currently still showing a fair degree of weakness, no real indication of this market reversing just yet. When we look at our 15-minute chart, if we scroll this together, we had a fairly big move down yesterday. Again, pulling back, consolidating in between the two peak formations. We've had a 3 push pattern up towards the high of that box this morning. 1 push, 2 push, 3 push. It's possible we could have a little bit of a pullback and a continuation down through these lows. The creeping trend back inside of the peak formation. Stops below yesterday's peak formation low at 97.70, and of course the low of the day at 97.58. So again, we've worked our pushed up into the high pin, and then pushed again. We may have one more push for the market. May consider this as one leg, reverse and engulf and come up as a 1, 2, 3 to hit the highs, and possibly a reversal downwards to continue that downward trend. If this market was going to find some support down low, 9800 level, lows of the day, we could see an engulfment, pin, hammer, reversal for a retest of the high. We'd want to see a breakthrough, pullback, and a continuation back through the highs of yesterday's U.S. session. Currently, again, this market is showing a fair degree of weakness. Up next is our pound USD. And again, this pair had a inside bar yesterday after pulling back strongly on Wednesday. We're back inside of the lows of last month, so technically still in the same range, 22.50 acting as support. There are stops above the high of the week, end of the low of last week, so we're right in the middle. Depending on how it handles this 22.50 area, will give us a bit better insight. We broke that high bull candle yesterday, pinned back, putting heat on traders who may have been short. This candle is potentially an indication of a downward continuation move after pinning the high on traders who were short. So keeping our eye on this, we may see this market continue to retest down low, and there is lots of room for this market to fall if it was to retest back to 2075. Again, on our 15-minute chart, we have an anchor point high from yesterday in the London session, anchor point low in the U.S. session. Before pulling back into consolidation, the market has worked its way up with 3 pushes, hitting stops on traders who were short mid-move in the U.S. session. Again, we could see one stop hunt back up towards the highs and possibly a retest back down through the lows of the day and possibly yesterday's U.S. session and lows and the lows of yesterday. Again, this market showing quite a bit of weakness. There's room for it to move on both sides, but depending on how they come out in Europe, whether they work up towards the high for a move down or if they consolidate and possibly retest the highs for a breakout pullback. But currently, this market has showed a fair degree of weakness and possibly has a peak formation in place. Just closing on a quote from Richard Dennis. I always say you could publish rules in a newspaper and no one would follow them. The key is consistency and discipline. We talk about this, keeping it simple. 12 candle window traders, 1 bar stop, 3, 4, 5 times your risk. Stick to the easy, simple trades at the top and the bottom. If it's a trend trade, be prepared to move with the trend. Again, stop hunts are with the trend and counter trend. So keep it simple, traders. Stick to your process. And as Richard Dennis said, the key is consistency and discipline. Have a great trading session, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at StaceyBurkeTrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.